The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Wednesday morning. Had a little bit of a disturbance in Paris this morning. A couple of people, or quite a few people killed, actually. Still digging into that. Might want to watch your news services on that. We're not going to talk about that in depth on the show here today. Just something that could possibly affect the markets, but doesn't seem to be doing that right now. Here's the situation on the S&Ps. We spoke, just kind of getting right into this. We spoke yesterday about the intermediate breadth being negative, and if you watch our show every day, you'll know what I'm talking about. I'll flash that in a little bit, but we were hoping. I personally had some resting orders around that 2025 area, hoping that we got that close below, breadth being negative on the intermediate and positive still on the weekly. We talked about, hoping that this thing would rally back up into the 2027 general area. Well, we got as high as 2023.50, and that was not the best thing in the world for me, but we've, want to try to trade the probabilities in that close below an inflection point and go back and retest it was what we were, somewhat banking on. And that just didn't get close enough for me. And then I was thinking about chasing it down. I was like, it's middle of the day. Maybe we'll get a rally back up into that. But never happened, and missed the sell-off personally, but that's the way trading goes sometimes. But the fact of the matter is, going back into the dial settings here, let me see if I can get this on the right page. Here we go. This is what I was referring to. So that breadth being negative on the daily, this will flip around a little bit as the market opens, because this is based, remember, again, on internals of this particular index and many more actually in here. Weekly still being positive. So, we talked yesterday, and in fact I believe I did the free video on the TFNN site yesterday about this 1972, 1968 area that we bounced off of from before, since the breadth was still positive in the long term, and they're intermediate. And if you want a good dissertation on this, just review yesterday's free video. It might be in the archives somewhere on the S&Ps. But as this intermediate had turned negative on the daily and we crossed below some borders, hopefully getting that retest never happened. Still bugs me. We're right in the middle of a fair auction here on the daily now. So the intermediate is still relatively negative, and we haven't reached a massive support area on the long term, being the weekly unfair lows relative to these daily unfair lows. So right now fact of the matter is, there's not a lot of leverage. We're in the middle of a fair auction on the daily. We're in the middle of a fair auction on the weekly. And if I pull up the scanner, you'll see across the grid here, I'm just going to go right down. This is the usual suspects of the currency futures and ETF world here. I'm going to go down to the S&Ps. I'm going to see that I'm gray. It's kind of not a lot of leverage there yet. And those inflection points are plainly stated 1972 and 1968 at DMZ down there for maximum support if this continues to stay positive on the long term. So I said a lot there. We're still below profiles, as the scanner has stated pretty plainly, coming back on the 240s, coming back up into that inflection point on the bottom of our 240 for possible retest here. Remember, these 240s are a great regulator on the way down. There's the 2025 area sitting, top of the box here on the short term, that we use these things to kind of regulate trades down. Once the long-term slant is somewhat determined, we try to allow profiles on shorter term time frames to regulate the next level up on longer term time frames, being the dailies and then the weeklies. And this is kind of a, if it ain't broke, don't fix it kind of situation. and you've got a leverage point here around 213, 214, that general area. We're trading 211, and we've been as high this morning as 212 rounded off. So that's an inflection point on the short term if you must step in and start trading S&Ps. And then you've got this 2025 coupled with that 2027 sitting here, which are all actually outputted in the scanner. We'll put that back up. And there's the 2025 area, and there's the 2027 rounded off area. And there's the profile chart. Or landscape chart. Let me just show you how this works. And there's those two inflection points, 2025 and 2027 right there. That's the level of the market right now. So again, that would be kind of maximum resistance, and that would be kind of Custer's last stance for a while on the on the situation following shorts with the Brett staying negative on the daily. Got to sell a lot today. Hope I didn't confuse anybody, but going through the process, the educational process, so to speak, you've got some short-term resistance around that 213 area. We've been as high as 212 this morning. You got stronger resistance around 2025, 2027. And you've got big time support down below 68 and 72. Okay, I'm ignoring these 60s. It's hard to talk about these on a show that's pre-market, and these things kind of change during the day. So, and as you can see, the level of the market just moved up a little bit there. And let's just go back and see what's going on here. Yeah, we're trading 212.50 right now. We just bumped up a little bit. These are real-time quotes, so we're getting right into that inflection point here. And you can orient stops on a short-term basis around that, but then you've got the little bit higher plane up here, 25.27. I've already said that. So that's kind of the situation on the S&Ps. And what's the easier trade to me all the time? I talk about this. I know you guys are probably tired of hearing about it, but as we go into the note bond situation, there's a lot of good conversation actually heard on the television for a change yesterday about the notes and bonds. Here's the situation on the notes. We had kind of a new blow-off here, but remember us having eclipsed the thing before. That happened in mid-October. And we also talked a little bit about this Euro bond, being probably the leader of the pack without question, and being we talked about sectors a little bit yesterday and said, well, you're looking at a sector that's out, or let's just say a sector that's underperforming. Let's just call it the XLE, and you're looking for weaker stocks in that particular sector if you're going to sell those, and those are the higher probability, theoretically speaking, relative strength type trades. This is the relative strength trade on the Treasury situation. Obviously stronger than the 10-year and the 30, which is kind of unbelievable, but that's the way it goes. But let's go back to the 10-year, and let's try to figure out what's going on here. We've got a little bit of a rally in the stock market this morning, and we kind of had a little bit of a turnaround yesterday. And we're pretty much back to where we started yesterday morning on the opening. So I wouldn't call that huge victories for the longs. But, here we go. We talked about leveraging off 127 area. And then, what do we do now? We're trading 128.03. So we've been above 129. And again, I'm going to go down to the 240s on this situation here, kind of regulating that breakout from 126.06. If you remember, that's where the daily situation, we caught that bid. And going up into the 129 general area, that's 3 handles on the 10-year in a matter of a couple of days. So that's, I'm going to call that pretty good. But right now on the 10-year, you've got this 127.26. That's going to be your next support area on this. When you're trading these, you also want to consider trailing stops also. I mean, you've got boxes and profiles, if you will, that are going to regulate the trade up. But you've also got, monetary, I would call them trailing stops, I guess, that, enough's enough. Even if you want to stay in the trade, I mean, this is, from 129 down into 128. That's a full handle. If you're giving yourself that much room, that's got to be in your game plan and your kind of business plan for trading to have that kind of volatility. But trailing stops are also a good mechanism to gauge at the same time you're using profiles if you are. So short-term support, 127.26 on the 10-year now. If the market rallies a little bit more, which may coincide on the stock market with the 20, 25, 27 area, this may slide back to there. That would be resistance on the S&Ps and then support right now on the 10-year. That's the way that's looking. And let's go right into the 30. Excuse me. 30-year, similar situation down below. It's kind of weird how these are lining up like this, but 147.11 is going to be support on the 30-year now. That's where if you guys have taken profits or are out of this trade, or even still in it, that would be more of a possibly adding to a winning position or entering a new position on the upside at around 147.11 on the 30-year. Okay. Briefly, we're going to talk about currencies. We're going to talk a lot about oil stocks today. We're going to, obviously the crude oil situation is bringing some of these stocks to their knees more than they ever have, and we're going to take a look at some of these in case some of you guys are trying to pick some battles on the long side and do some bottom fishing down there, or you're short and you're considering, is enough? We're going to take a look at those. But first, we're just going to look at the very generics for about a minute and a half here on the currencies. Again, the gift that keeps on giving, the euro. Haven't had any other stance on this other than, it's my chart locked up. Here we go. Haven't had any other stance on this other than just being short. And considering we got that gift the other day at 125.74, it's just been off to the races. There's really, in my opinion, zero reasons to take this off. And there's absolutely zero reasons to try to get long this thing, in my opinion. And I'm basing those opinions on this, going back into the currency world up here and going to my euro and seeing that we're pretty red across the board. And that's just amazing, seeing that 42 number, which is 42 consistent bars below the 240 profiles, which is just amazing. So here's the inflection points. We're not even anywhere near any of these things.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. The yen, let's just take a look at that really quick. We were looking at the euro, and I apologize for getting cut off. I just had a technical issue and lost connection with TFNN. Here we go. So we talked about waiting. In fact, we had a pullback, and let's just look at the weekly unfair highs on the yen. This is the Japanese yen USD. This is going up here. It means the devaluation of the yen, even though it looks like it's getting stronger. This is kind of an opposite situation. 120.42 on the top, the weekly, and we have 120.82.6 sitting on top. So what's kind of stance that we've taken on the yen, if you've been watching this show since 101.33 way back when, 2,000 pips ago, has been to opt out on short opportunities, basically, and try to pick up the support. And this was a case, again, we spoke about past couple of days, waiting until we either broke out above that DMC 120.45 or so and 120.80, or had the pullback into the daily unfair lows around 118.19. And now we've rallied about, 150 pips off of that area, and we only had a little bit of a noise area. We reached a low of 118.06, and that's about 10-15 ticks on the south side of that inflection point. Now remember, a lot of times just like the S&P I spoke of earlier, you got to give yourself a little bit of room. I didn't give myself enough room at the 2027 area because we only got it into 2023 is what it was. So I think I had some orders up at 2025 in that area, but again, I'm going to stop talking about that in a second. But if you're playing that same type of game around inflection points, you just got to give yourself a little bit of a buffer to be wrong. And this is a situation where if you had stopped yourself out really, really quick and didn't give yourself that buffer, you would have maybe lost a little bit too little. And not being able to make a lot. As we always talk about, it's lose a little, lose a little, lose a little, make a lot. So this is, a really nice situation on the yen. It kind of is proof of concept that it's probably better to try to buy support on this thing than sell resistance, and that's just the way the yen bounces, so to speak. All right, so, and again, we're going to get into these oil stocks in the second half of the show pretty much exclusively because there's so much in play. But I've got to show the dollar here. This is actually blowing my mind. I thought actually we may have a little bit of a resting period here, but this, and that resting period doesn't mean to short this thing. It just means that the most recent breakout on this and buying support around 88.37, and again the breakout at 89.60.61. Not shorting, not finding reasons to short this. By the way, we're trading 92.25 this morning, and this is the 240 kind of regulation of the trade up again. So as you can see, the profiles become in force after this orange bar, and then we've got the support area here, and short-term kind of noisy range trading things right here, but then we got the breakout above. Excuse me, and this has been something just like the yen that we've been, I guess, not advising, that's not a good word to use in this environment, suggesting that it may be better to look at buying support on the dollar than ever selling resistance, and kind of laying off that situation. So that's the dollar recap, if you will. And we haven't taken a look at the Shanghai lately, but I want to pull that up before we get into the oil stocks later. This is again something just kind of proof of concept here. We talked about laying off the shorts on this, even when we had some super volatile days on this recently. Here's the situation on the Shanghai, and as you have seen, we had that 29.20 when that kind of big couple of volatile days back here, and then we had this recently over the holidays for the most part. I guess that's when let's see, what is that? Yeah, right. Oh my God, that's the day before Christmas. Again, using profiles to regulate the long trade up, because we haven't had any technical damage, and this has been something to stay away from on the short side altogether. And as you can see, these inflection points are pretty cool. And when I pull up those inflection points, and I've lost my scanner here, I'm going to pull this back up. I'm going to just show this super quick. Looking at the Shanghai, going down into this, there's the Shanghai, and there's the all green across the board and all the inflection points to pay attention to. And there was that really cool, important inflection point at 29.20 that we spoke of. And here's the landscape. We'll be right back. We'll get into these stocks, which I know some of you guys are probably playing around with.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Hope everybody's doing good today. I lost my screen here. Hold on 2 seconds. All right. Okay. Hope everybody's seeing my charts now. All right. So let's take a look at we got to mention a couple of things here just before we get into the oil stocks. Here's the situation on the British pound. We were preaching this 155.91, 156. Let's just make sure I got that right. Oh, no, I did this again. Here we go. All right, here's the weekly. This 156.05, 155.91 area kind of closed below retest, and this thing's falling apart. And what do you do now? Again, here's the 240 situation, and my 240 boxes are not appearing here yet, so we'll just sit tight on that. I hope we're not having a problem with D-signal again. We're just going to sit tight on that. We're going to come back to the British pound, but I also want to mention the Australian dollar. We've been extremely bearish on this since basically it was, again, kind of a weekly situation from way back when. I'm going to pull that up just because nobody knows that except for me right now. Here we go. We had the massive breakdown around the 92, let's just call it 93 area. And again, we've had zero reasons to be long this thing. And allowing that weekly breakdown, just like the euro, the weekly breakdown, and then the daily regulation of the trade down, along with some of the 240 situation. This is kind of the gift that keeps on giving too. And again, you just like the Japanese yen, you had a kind of a Bank of Japan type attitude from the Australians, and a couple other things haven't helped this situation. A couple of free trade agreements in place, and the idea that they wanted their currency to go down. You don't want to step in the way of that fundamental type slant or attitude, especially when it's somebody who can manipulate the market like a government or central bank. And this is the daily situation on the Australian dollar. We kind of had that little ricochet back into the inflection point yesterday. The only thing that's going to be disturbing about this, to be honest with you, and if you can hang in there on a short trade, again, this thing's in the hole just like the euro and the British pound, and it's hard mentally to just keep pressing the gas pedal on the short side. But again, these have been almost lifetime opportunities, I would call them, in currencies, because you're basically having someone forecast that they are going to make something happen a certain way. Not guaranteed, but they're going to try very hard. And any technical damage, just to restate these numbers, that would even remotely start to happen on the Australian dollar, which will be kind of a stop out like back in October, just kind of having the dailies kind of say, hey, you know what, the leverage is not with us anymore. The long-term trend's still down, but, you know, you know what? We don't want to give back too much. It's the same situation here. You got an inflection point 81.35, and you got one here at 83.22. You just got to pay attention to those, and those are stop-oriented leverage situations based on your appetite for risk. And by the way, those are all given within the scanner here. And again, I've got the basics up here, but the Australian dollar, there we go. There's that number. And those are the two numbers we just spoke of. All right, so let's get into some oil stocks here, but let's first look at crude oil. And we're going to go down to this. Excuse me. I think everybody's sick. You're talking about this Tamiflu thing, everybody running to take it. I mean, I don't know, it seems like, you know, my whole lifetime, it's like people get the flu and it's okay, but everybody's scrambling to get this Tamiflu like they're going to die. And they've said now that most of these flus have mutated past Tamiflu, and it's only having less than a 30% effect now. I don't, you know, anyway, I'd like to own stock in that company. Here we go. Here's crude oil, and got a little bit of a bounce this morning. Hit a low of 47 earlier, but the 48.60 area. Again, we've got nothing to hang on to down here, and that leverage point at 55.11. We've almost, you know, that's an $8 a barrel move in 3 days. Okay, we'll say that again. That's an $8 a barrel move, and guess what? That is a 15% move in 3 days down in crude oil after we've been down big already. And I'm sure you're saying, tell me something I don't know. But, you know, how do we trade this thing? And we're not getting our 240 inflection points here right now. We're going to focus on the daily. And if you're playing this from the long side, I'll be honest with you, I would probably say enough's enough down here. We've had a really good, we're pretty far below profiles here. There's nothing to leverage off here on the short side, in my opinion, at this state. And I'm going to pull up some 240s as soon as they pop up. Excuse me. And as we're not getting those right now. The key signal's having a slight little problem here. But, you know, what do you do now with crude oil? I'd actually sit on the sidelines on crude oil. A 15% move in crude oil in 3 days. You know, and that brings up another good point, actually. On our automated systems, and here we go. Let me just finish what I was saying, I guess. On our automated systems, you know, there's a feature that we have in the strategies to, you know, that we deliver to some of the prop traders that we have and guys like that. It actually has, you know, one of the features is a monetary enough's enough type thing, because as you look, you know, you don't ever, you know, as you develop a strategy, there's filters and there's exits. So there's entry filters and there's exit targets, basically. Some of the exit targets are based on that regulation of the trade with the 240s and the 60s and things like that. Some of them are based on inflection point targets on the other side of the box, weekly DMZs combined with daily DMZs. There's all kinds of things that you got for exits. But one of the exits is, you know, percent move. So if we develop, you know, a strategy, and over time we do the back testing for the last 10 years, which is usually what we do it on, you know, we'll say, you know, what if, for instance, crude oil or gold moves 6% move in a matter of a time frame that's relatively short, and should we kind of use a monetary exit percentage-based type move to, you know, say, hey, is that probability-wise a good thing to do, is to take some off the table when you have a massive move like that, especially in an already big down move. And, you know, actually that enhances the strategy sometimes. So, you know, it's a compression of time frame, and it's a monetary gain factored in there. And I'm going to look at this and say, you know what, we've had a good move down. We haven't talked about taking this off yet until right now. And I think right now you've eclipsed the $50 situation. People now people are jumping on the bandwagon. I think Kramer's one of them talking about $30 oil. That ultimately may happen. It's not going to happen in a straight line. Who knows? But again, this is something where you have zero leverage, in my opinion, on the short side still down here. And if you start having some, as you can see, these 240s, if you start having closes, which we may easily happen now above the 48.68 area, that's going to be something you're going to have to kind of sit tight and wait for a new inflection point to appear on the daily, which will be new, like a new demand area down here, and then you can kind of reassess things. But the trade-off of 55.11, that may be over for a while, even though we've actually seen longer moves down in crude oil. This is getting to the point where I think you might lose some leverage on the short side down here, just based on that monetary situation. So let's pull up some oil stocks. I've got, and I'm going to look at the XLE really quick first. Man, am I getting sick? Ooh. Here we go. All right. So here's the XLE. And by the way, the oil stocks are sitting right on support 74.18. That's primarily why we're looking at this today. 74.18, we're looking for trading opportunities. And again, if we go into the scanner and look at the XLE, and here we go, XLE, boom, bottom. It's showing you right there, bottom. So if I did a filter, and again, I can choose 2,500 instruments. I've just got the generic usual suspects commodity currency future where I'm just going to focus on the XLE here. I can do a filter and find these bottoms, but the XLE energy bottom here is just showing me that 74.18. Now, as we look into the internals of this, and I'm going to pull up the big mama stock here, ExxonMobil of the group. I was looking at this. Actually, ExxonMobil is to some degree has been hanging in there on this last move down, and from a relative strength standpoint, and having these inflection points line up at the 89.49 area, along with, oh man, I hate it when I do that. Here we go. Along with the 89.66 area, that DMZ, crude oil's kind of come down significantly. We may get a little bit of a relaxing moment in the onslaught on the downside on crude oil, and we're at a high probability area. I know we kind of poked our nose down below here yesterday. We reached a low of 89.02, but again, you got to give yourself a little bit of noise, and this is kind of recently, we've been above profiles on the daily. We're coming back. I was relatively still bearish on crude oil in general, but now, and that's going to kind of, that rising tides lift all boats, in this case, sinks all. Would that be equivalent to, say, lowering tides sinks all boats? I don't know. But anyway, that market move down in the crude oil situation basically has dragged this down to a high probability area. And considering everything I just said, this may be something to actually take a shot on. And this morning, we're actually trading 98.81 pre-market, which is about a dollar higher already. So yesterday, I think we had some decent lineups here. And we may have a little bit of follow through here on the upside because crude oil may start just ramping up in a relaxing mode a little bit. And if it doesn't, the good news is you know where to put your stops oriented. You've got this DMZ down here, 89.49 weekly on for lows, and this is something might want to take a look at. Here's the situation on a couple of other bellwethers. I'm just going to pull up SLOB, as I used to call it in the day trading days, SLB. Again, sitting at weekly unfair lows. Now, again, crude oil's made lower lows big time. Schlumberger's kind of been hanging in there. Scanner picked this out too, 80.68. And we want to take a look at, this from the long side too. But the good news is you've got 80.68 sitting here on the weekly, just like we talked about, Schlumberger. And you've also got this 79.24. So you've got a little DMZ down there. And, again, this is something that's been kind of on a relative strength scale recently outperforming crude oil, and that's something to pay attention to. Let's just look at Chevron, CVX. Excuse me. Here we go. The XLE, some of these stocks have come down and just recently touched or sitting right at this is 106.16. Excuse me, we reached a low of 106. Let's see where that is. 106.48 this week, so that's, in the general neighborhood. And here's the situation on the dailies. So, again, on a relative strength scale, you got that most powerful inflection point weekly over daily over 240 down the line. And this may be something to take a shot on, too, for a little bit of a trading opportunity on CVX. And I also want to take a look at ConocoPhillips. Now, this is something I don't like. You always want to try to buy the strong stocks in the sector if you're going to, play that game. And this is something that's come below inflection points. Again, relative strength speaking, obviously it hasn't made new lows with crude oil making new lows. But again, this is not on the profile situation that I like to see. So this is something I'd opt out on. Every stock I've shown so far has been, it's a great buying opportunity. Take a shot here, blah, 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 with stops in force. This one, obviously, in my opinion, is not going to be something in that same wheelhouse. And Occidental Petroleum, all these obviously are doing the same thing on the relative strength game. But again, this is something on the daily, you want to get back above this inflection point, 77.28. This has pretty much traversed the entire fair auction and come down into a possible buying point here at around that area. And this is something, again, where you can orient stops. And 77.28, we're trading a little bit higher than that pre-market this morning. So that's, we're kind of sitting above there. And if crude oil happens to migrate up a little bit farther, this may be a situation where you can take advantage of. Some of these may continue to go south. But the good news is, where to put your stops in based on this type of theory. Let's take a look at APC really quick. And we're probably going to have to pick this back up after the break. APC. Here we go. All right, we're going to discuss this a little bit after the next break here, and we'll be back last 5 minutes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. And I hear we have a caller, Daisy. Are you there, Daisy?
Yes.
Hey, how are you today?
Well, it's a little early for me. I didn't sleep since about 2:30 this morning. That's the only reason I could call in and be cogent.
Well, I appreciate you staying up all night just to call in this morning.
Right.
Are you at? Where are you located?
Denver.
Okay. Wow, it's cold out there right now, I guess.
It's been really awful.
Wow. Well, I hear you got a question about something.
Right. My 1 month of free trial of the TAS scanner is just about up, and I have trouble figuring out how to use some of the items on it. Okay. And I wanted to see about a buy in AT&T and how to use the scanner. Now, I can't access. You don't have we can't go to Tiger TV after your show is over and pick it up. You know, I can go to the archive occasionally and find your archive on it, but
you mean on the show?
Right.
We actually you might want to call TFNN about that, but we actually post that show archive on our site. I mean, I don't want you to.
Oh, I wish I'd known that. Yeah.
Yeah. It's just something we record. But I think there's a way to get the visual show. Call TFNN. I'll actually find out. Maybe I'll talk about that tomorrow. But it's worth calling them about it.
Because I couldn't even get the audio archive. You know, after you had mentioned the S&P on, was it December 17th or whenever it was that you thought it was going to shoot up, and it did. I missed the whole thing because I kept looking for your archive and it wasn't there. And then I heard you on the show. I heard you on Tom's show saying something about it. I thought, where is it? I went back. It wasn't there.
Oh, man. I'm sorry about that. Well, you know what? I'll figure out where and how they could possibly post some visuals. And that I appreciate the comment there. But, the scanner, the inflection points, I use, well, I'll tell you what, can you watch the show tomorrow? Maybe I can give more of kind of a webinar thing on the scanner tomorrow in general. and maybe that'll clear up some of the confusion of how to use it. I mean, basically, and actually one of the guys at TFNN is asking that you call them back in 15 minutes. Just ask for Al, and I think maybe they can help you on the archive stuff. They just sent me a note there. But tomorrow I'll be able to, maybe I'll just kind of do more of a run through on the scanner in general. But, you know, the inflection points that are provided on there, you know what, we'll get into that more. Well, you've got a question on AT&T.
Right, and so when I've looked at the AT&T stuff, I thought, okay, I know about, you know, the top and the bottom of the box and all that sort of stuff and using your stops. But I would assume I'd have to use the weekly, not the daily or the 240 or whatever, in order to make a decision, but I'm not sure.
Yeah, the weekly, it's like going down the line. The weeklies are kind of more the long-term, you know, major inflection points for longer-term trading, and the dailies are more for that kind of intermediate swing type situation. So the weeklies kind of identify for me, and we actually created this for our internal group so we could not miss trades. Hopefully in the future, it kind of, you know, does a little bit of a scanning of the marketplace. We got about 20 seconds here, by the way.
Right.
So to answer your question on AT&T, 3248 down in that area combined with 3227, that little kind of dig-in area is going to be your best long opportunity situation on this for any pullbacks. I know this is a dividend play for most people out there, but that would be the biggest pullback. And I tell you what, if you could talk to TFNN, I'll do the show more so on the scanner tomorrow because a lot of people has this same question, and then we can take a look at this together.
Thank you so much.
You're welcome, Daisy. Thanks very much. Hey, bye. It's, Steve Rhodes is next, guys. We're getting off the air here, and stay tuned for him.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.